Welcome back to Return My Capital. It is time for the best video of the week, the Dividend Roundup. This will be for the week of the May 5th to the 9th. We're going to cover recently announced dividend increases, decreases, or cuts. We'll then get into ex-dividend dates for the week ahead, and we'll wrap things up with upcoming dividend distributions for the week ahead. So release this video every week on Sunday, allows you to stay in tune with what's going on with your portfolio and perhaps your individual holdings. So we'll kick things off here with any recently announced dividend changes. First company is Apple, ticker symbol AAPL. I think it's still the largest company in the world. I could be wrong on that. They did tumble after earnings. I believe that was on Friday. I think their last earnings call was Thursday after the bell, and then Friday they tumbled a little bit. But they did announce a dividend increase of 4%, bringing that yield to 0.51% after the shares pulled back a little bit. It's now over 0.5% on that yield. So it was 25 cents raised to 26 cents. They will go ex-dividend next on May 12th and pay out on May 15th. And Apple has been increasing that dividend for, I believe 14 years now. So what you're seeing here over the past year, Apple up almost 19%, but year to date, they are down 18% now. So Apple shares almost in bear market territory, again, yielding 0.51% now. Now, from a dividend growth perspective, you see that 5-year CAGR on Apple is really only 5.4%. So it really hasn't been that much of a dividend growth beast. Really, it's more so about share buybacks with Apple. So years ago, they had announced the largest buyback in history. And then just in this last earnings call, they announced a new $100 billion share buyback. So absolutely incredible. That's the second largest share buyback in history. But then, you do see the dividend growth history here. It's nice, it's consistent, but it's nothing that's going to knock your socks off, if you will. It's nothing like their share buyback plans. So that was Apple. Sorry, that's the first one. We'll move faster. Next company is American Waterworks, ticker symbol AWK. A pretty nice 8.2% dividend increase from 76 to almost 83 cents per share, 2.25 on that dividend yield for AWK, and they've been paying a increasing dividend for 18 years now, so marching towards dividend aristocrat status. I did make a video last week about some of the best utility stocks, utility companies in the market, and certainly American Waterworks would qualify on that list. So I will link to that video in the description of this dividend roundup if you want any more information on American Waterworks. I believe it's the largest water utility in the country. What else did we have for dividend changes that were recently announced? We've got W.W. Grainger, ticker symbol GWW. Real nice 10.25% dividend increase from $2.05 per share up to $2.26 per share. Now, the yield on that dividend is less than 1%. It's 0.85%. And W.W. Grainger is a dividend king. They've been paying out dividends for 54 years. So you see here the share price a little under $1,100 per share, right in the smack dab of middle of the 52-week range, $8.75 on the low end, $12.25, let's say, on the high end. Pretty elevated price to earnings ratio of 26.4. You do get over $9 a year in dividends just because that share price is so elevated, but less than 1% yield on this $51 billion dividend king. That it's an industrial. It's all about repair parts, maintenance parts, cleaning equipment, pump, storage. They're a conglomerate, but that's W.W. Grainger. Real nice, over 10% dividend increase. We've also got IBM, ticker IBM, one of your big legacy tech names. They announced a 0.6% increase, so barely increased it, raised it 1 penny from $1.67 to $1.68. They do pay a yield of 2.74%. They are a dividend aristocrat, 30 years. And their next ex-dividend date will be on May 9th, so upcoming here, and they will pay that distribution June 10th, and that'll be $1.68. We've got KKR, ticker symbol KKR. They announced a 5.7 dividend increase from 17.5 cents per share to 18.5 cents per share, just a 0.63% yield on KKR. It's actually kind of an interesting company. You see over the past year, up a little over 20%. Year to date, it's in bear market territory, down 21%, lower half of the 52-week range. You look at this performance, though, from KKR over the last 5 years, they're up 382%. And then over the past 10 years, 417%. Well off all-time highs here. We're at 117, let's say, today, and all-time highs of 163. But this is over a $100 billion market cap company. And they offer sort of alternative investments, right? So, they're an alternative asset manager. It's actually kind of an interesting company. I should do a deeper dive on them. But yeah, minimal dividend increase here. You see this yield 0.63%, 5-year CAGR on that dividend of 7%. So it's not like it's been a dividend investor's dream by any means, but that share price appreciation has been outstanding. Last company we'll talk about from a dividend increase perspective is Paychex, ticker symbol PAYX. A real nice 10.2% dividend increase, bringing that yield to 2.9%. 15 years of dividend increases for Paychex. So 98 cents, bumped it up to $1.08. Their next ex-dividend date is May 12th. Their next distribution will be on May 29th. So that wraps things up. No decreases, dividend decreases to call out, which is great. No eliminations to call out, which is great. With that in mind, we'll move on to the ex-dividend date portion of this video. And so the company, well, only one company in this case, but the companies that we talk about for Monday, which is May 5th, they'll be going ex-dividend on Tuesday, which means if you want to participate in the upcoming distribution for these companies, you need to own them by close of business on the day that we talk about them. So for Monday, May 5th, we've got MetLife, ticker symbol MET. Let's take a look at MetLife here. Big insurance provider. Year to date, they are down just 5%. Over the past year, up 11%. Well off all-time highs. They're at just under $78 today. 88 was the high, trading right in the middle of the 52-week range, almost a 3% yield on this insurance giant. You've got $52 billion on the market cap and really no short interest. So they are going ex-dividend on Tuesday. You need to own them by close of business Monday, May 5th, tomorrow. And they will be paying their next distribution on June 10th. So you're going to have to wait a little bit over a month for that dividend, and it will be just under 57 cents per share. Now, Tuesday, May 6th. So these are companies that are going ex-dividend on Wednesday the 7th. Got to own these by close of business on Tuesday the 6th. You've got ResMed, ticker symbol RMD. They will be paying their next dividend on June 12th. So again, you'll have to wait a little bit over a month. You'll be receiving 53 cents per share. Shares are almost $240, so it is less than a 1% yield on ResMed. Last company for Tuesday, you've got Waste Connections, ticker symbol WCN. They'll be paying out on May 22nd, 31.5 cents per share. Shares are almost $200. So another company with a very small yield of just 0.64%, but they are going ex-dividend Wednesday, which means you need to own them by close of business Tuesday. They are a very safe company, right? Very stable business model. They're entirely involved with waste removal, waste collection. Very, very steady up into the right revenue chart here. I mean, back in December of 2020, they were earning $5.5 billion. At the end of 2024, almost $9 billion. So really great business model, very stable, very safe. You see the EPS estimates of 8.5%, 14%, and 13.5% growth for the next 3 years. That dividend CAGR is almost 12% for the past 5 years. Payout ratio, not even 25%. And you see the yield there, a little over 0.5%. So it's a dividend growth play. Over the past 5 years, they are up 132%. And over the past decade, just exploded higher, up over 400%. So it's been a fantastic performer. You see the dividend growth. Back in 2017, they were paying 50 cents per share. Now, at the end of 2024, they were paying $1.17 per share. So that covers Tuesday. We'll move on to Wednesday, May 7th. So these are companies you need to own by the end of Wednesday if you want to participate in the next distribution. You've got Main Street Capital, Capital, ticker symbol MAIN, MAIN. Next distribution will be on May 15th, 25 cents per share. Shares are just under $54, so a little over 5.5% on that yield, and 15 years of consistent distributions for Main Street there. What else do we have for Wednesday? Let's see, nothing else that I really want to call out. So we'll move on to Thursday, May 8th. These are companies going ex-dividend on the 9th. You've got American Electric Power, AEP. This was also a company that was in that utility stock video that I'll link to down below that we already talked about. But AEP, their next distribution will be on June 10th, 93 cents per share, almost a 3.5% yield on AEP. 15 years of distributions, consistently increasing with AEP. You've got CMS Energy Corporation, ticker symbol CMS. You'll be getting their next distribution at the end of the month, May 30th, 54 cents per share for a 3% yield on CMS Energy. You've got IBM, they'll, like we already talked about, but their next distribution will be on June 10th, $1.68 per share coming your way. Shares of IBM are $245.55, almost a 3% yield, 2.74. And anything else we want to hit for Thursday here? Yes, we've got Pfizer, ticker symbol PFE. Let's actually take a look at Pfizer here. They've been performing just terribly. You've seen the yield on Pfizer come screaming up to above 7%. Surprisingly, the short interest is still under 2% on this pharmaceutical giant. Shares are lower half of the 52-week range. Pfizer's now trading for $24.20, down 12.5% over the past year, down almost 9% year to date. You're seeing a little bit of a recovery off the bottom at $21.59. Again, now at $24.20. Over the past 5 years, they're down 35.5%, and over the past 10 years, down almost 30%. So been a pretty miserable performer from a share price perspective. You see these highs back here during the pandemic up closer to $60. So you've been more than cut in half on the share price here, and that's why you're seeing this huge yield on the dividend of over 7%. Payout ratio, though, isn't too alarming, 52.5%. 5-year dividend growth rate of slightly over 4%. And here's what that dividend growth looks like back in 2014, just under $1 at 99 cents, and a decade later at $1.68. So if you're a high yield investor and you're not opposed to taking single stock risk in the pharmaceutical space, it is a bit of a different type of industry to invest in. But if you're comfortable with it, this is certainly an attractive high yield dividend play. Also on Thursday, you've got Parker Hannifin Corporation, ticker symbol PH. Next distribution will be on June 6th, $1.80. Shares are just under $620, so almost a 1.2% yield on this company that's been paying a growing dividend for 69 consecutive years. So almost 2 decades into their journey of being a dividend king. Pretty incredible. You've got Sunoco, ticker symbol SON. Next distribution will be on June 10th, 53 cents per share, 4.74% yield on that energy company, 43 years of dividend distributions. Anything else for Thursday? Yes, we've got Walmart. Their next distribution will be on May 27th, 23.5 cents per share. Shares have performed extremely well on Walmart recently. We can take a look at it. I think it actually may be trading for a higher valuation now than Amazon. Yeah, it is. You see the forward price to earnings on Walmart here of almost 38. I believe Amazon's closer in the 31 or 32 region. But it's just been a monster over the past year. It's hard to believe, but shares of Walmart are up over 65%. Year to date, up 9.3%. Past 5 years, 140%. In the past 10 years, 277%. The market cap on Walmart is now up to nearly $800 billion. I mean, I understand the moat around this business model, but that's a pretty elevated valuation for Walmart. That dividend yield, because shares have performed so well, has now creeped down below 1% at 0.95. Payout ratio, though, is just 33%. Gotta love that. Dividend's been relatively slow growth now, given the fact that shares have performed so well recently and that the payout ratio is so low at 33%. I think we can expect future dividend increases to be better than this 5-year track record of under 4%. It is a dividend king at 51 years of increasing their distributions. Moving along to Friday, May 9th. So you need to own these companies by the end of the week if you want to participate in their upcoming dividend distribution. You've got California Water Service Group, ticker symbol CWT. This is now the third stock we've talked about today that I covered in a more in-depth fashion in that utility video I made this past week that I'll link to in the description of this video. They will be paying their next dividend on May 23rd, 30 cents per share. Shares are $49, just under $49, almost a 2.5% yield on that dividend king. 58 years of distributions for California Water Service Group. Also on Friday, you've got W.W. Grainger, the company we talked about earlier in the video with the nearly $1,100 share price. Their next distribution will be on June 1st, $2.26 per share coming your way. 0.85% yield, and again, dividend king, 54 years. We've talked about a lot of dividend kings today. That's kind of cool. KKR, the company we talked about with the recent dividend increase, very minimal dividend increase. Their next distribution will be on May 27th, 18.5 cents per share. Shares are $117, so it's a 0.63% yield. Anything else for Friday? Yeah, we've got Paychex, ticker symbol PAYX. We also talked about them in the dividend increase portion of the video. Their next distribution will be on May 29th, $1.08 per share, 2.88% yield on Paychex. PPG Industries, ticker symbol PPG, another dividend king, 53 years. Their next distribution will be on June 12th, 68 cents per share, 2.5% yield there. Shares are $110.50. Very, very premier player in the materials sector, paints, lubricants, all that type of stuff. SJW Group is the last company we'll talk about from an ex-dividend perspective. Ticker symbol's SJW. Hard to believe, yet another dividend king. I'm actually not super familiar with SJW. Let's take a quick look at them. Over the past year, shares are flat. Past 5 years, down 6%. Over the past 10 years, up almost 88%. Pretty much in the middle of the 52-week range, $55 today. 52-week range was 45 on the low end, 62 on the high end. 3% yield, no short interest, only a $2 billion market cap. So it's actually a pretty small market cap for a dividend king. That's interesting. What do they do? Okay, it's a utility. Interesting. It's a water utility, wastewater services. Very cool. Let's see. Yep, as you would expect from a utility, small but consistent growth. Pretty low payout ratio for a utility. Balance sheet looks about right. I talk about that a lot in that utility video that I'm going to link to. Been growing the distribution at a 6% clip. Not too bad. Back in 2014, SJW was paying a dividend of 75 cents. And now we're up to $1.60. So real nice dividend growth. But that ends our portion of the video for ex-dividend dates. We'll wrap things up here with companies that are paying a distribution in the week ahead. Again, May 5th to the 9th. So with that in mind, we'll get right into the best portion where you find out who's paying you money this week. We've got Air Products and Chemicals, ticker symbol APD. Actually, they're paying out on May 12th, so 2 Mondays from now, but $1.79 coming your way, a 2.6% yield. Clorox, the Clorox company, ticker symbol CLX, May 9th, paying out Friday, $1.22, 3.5% yield on Clorox. It's actually a pretty attractive yield for Clorox. I remember during the pandemic, they were up to $237 a share. Now at $139, lower half of the 52-week range. That dividend yield has come screaming up to 3.5%. That's pretty attractive. Just under a 20 on the price to earnings ratio. Very stagnant growth expectations. 2025 is supposed to be a pretty solid year, but then you're looking at 1.5% EPS growth for 26, 4% for 2027. Dividend growth has been very slow, less than 3%, elevated payout ratio at 70%. So certainly wouldn't be a dividend growth play, but not a bad 3.5% yield. 3 more years to go until Clorox is a dividend king. We'll see if they can get there. You've got back to the companies paying out distributions this week. You've got CSW Industrials, ticker symbol CSWI, May 9th, Friday, 27 cents per share, just a 0.3% yield. Golly, a 0.3% yield. Let's see what their share price is. 320. Yeah, interesting. Well off all-time highs here. Look at that pop. They were up at 430 down to 320. Interesting. DR Horton, ticker symbol DHI, also paying out Friday the 9th, 40 cents per share, 1.3% yield. General Dynamics, ticker symbol GD, big defense contractor, also paying out Friday the 9th, $1.50 coming your way per share, 2.2% yield. You've got Lowe's, the counterpart to Home Depot, ticker symbol LOW, paying out May 7th. I believe that's Wednesday. Yep, Wednesday, $1.15 per share, 2% yield on Lowe's. Take a quick look at Lowe's. They have been a fantastic dividend growth play. Let's see, over the past 5 years, up 111%. All-time highs were up at 287. Now we're at 227. Let's take a look at what that dividend growth has been. See, yeah, 5-year CAGR, good Lord, 15.9%, 61 years of growth, dividend king status, baby, 38% payout ratio. That's always exciting when you see a company that's paying out $4.60 a share on their annual distribution. Their payout ratio is only 38%, and they've been growing it for the past 5 years at almost a 16% annualized. Let's take a look at the chart here. Back in 2014, paying out 82 cents. A decade later, they were paying out $4.50. That's unbelievable. Golly, that's a phenomenal dividend growth, just explosive. Also paying out this week, and the last, second to last company I'll call out is MasterCard, ticker symbol MA. They'll be paying out their distribution on Friday the 9th, 76 cents per share, just a 0.5% yield. So a 0.5% here for MasterCard on this massive payment processor. Oof, 27% up over the past year, 108 over the past 5 years, almost 500% over the past decade. 35 forward price to earnings ratio. Yeah, I think it's fair to say that companies like Visa and MasterCard are richly valued. You look at that EPS growth estimate for MasterCard here, 9, 17, and 17% on the EPS expectations for the next 3 years. 5-year CAGR to that dividend, 14%. That's silly. Payout ratio is under 20%. Look at this dividend growth history chart. Back in 2014, they were paying 44 cents. God, a decade later, they're paying out 264. 44 cents to 264. That's great. The last company that I'll touch on that's paying out a distribution this week is Nucor, ticker symbol NUE. Actually, it'll be 2 Mondays from now, the 12th, 55 cents per share for a 1.8% yield on Nucor. So that's your dividend roundup for this week, May 5th to the 9th. Hope you got something from it. I hope this brings you value of keeping track of who's raising dividends, who may be slashing their dividend distribution. If you want to add to positions before the upcoming ex-dividend date, we give you that, as well as the companies that are actually paying you to hold them in the week ahead. So hope you enjoyed it. Hope you got something from it. If you enjoyed it, please like, please subscribe, all that good stuff. Thank you very much for watching. Have a great week. Take care. Bye-bye.